Welcome back to another market update, everyone. Let's see what Bitcoin and the other markets have been up to recently. So, not much has changed since the last market update. We're still ranging in the high 70 to 80k area right now. The market has been digesting the aggressive breakdown from the median power law line in late February. When looking at this from a pure market structure perspective, we had the initial leg down, followed by the Trump strategic crypto reserve pump, which perfectly retested the median power law from the underside. After that, we fell even lower, and are now forming something that looks like a bear flag. When taking the theoretical measured move, we can see that another dump could possibly take us to the low 70k area, which lines up beautifully with the low 70k area support we've been talking about. This 70k area is really important psychological support because not only did we find resistance here for months upon months in the previous consolidation area, it was also the double top ultimate resistance area in our previous market cycle, which ended up being the peak of the cycle. We can also see that we're getting really close to the full power law model bubble projection, so we're approaching an important area over here. It wouldn't really be a big deal if we did end up dropping below it, because that has actually happened more often than not in previous market cycles. Just earlier in the cycle than it would be this time. It's just important for Bitcoin to pull itself together in the next couple of months, so we could at least follow its price trajectory to 200k or so, even if it ends up being under the projection line, until it reaches the top, of course. Now, let's get to the other power law indicators, starting with the log chart. We can see that we're getting pretty close to the blue trend deviation line, which represents a 25% trend deviation from the median line. This line has been important support and resistance many times in the past. Our previous consolidation area was also ended by a failure to convincingly break down from the blue line. I'd like to draw your attention to this area, however. Look how similar it looks to the current formation. You probably know by now that fractals work until they don't, but this would be a really beautiful setup if we do end up creating a similar launching pad to the next top. Now let's look at the Bitcoin power law clock. It's currently 9:42, and as you can see, we're still oscillating just above the red average line. However, the orange forecast line is beginning to pick up the pace, and will eventually intersect the average in June or so. Price will likely stay well below that line until your taxi driver starts lecturing you on Bitcoin near the market cycle top. Now to the Detrended oscillator relative to price. Nothing new here, still in the slightly undervalued yellow territory, which is nice to know if you're thinking about buying more. If Bitcoin did end up dropping a bit further here, that would even bring us to the muddy green territory, which would be a ridiculously lucky buying opportunity for what is typically the mania phase of the bull market. Next to the local Hurst Exponent. As suspected in the previous video, Bitcoin did attempt to reverse the looming oscillation to the downside. However, it has to be careful and not form a double top here if it really wants to reverse the short-term bearish trend. Finally, let's look at the Minotaur trading system using the conservative base settings and 15-minute time frame. No new trades here yet. The last one is from the 10th of March, which brought the average entry price down very nicely. Should Bitcoin continue to drop here, it will likely enter another safety order to bring the average price down even more, until we get a strong enough rebound to exit all positions at a beautiful profit. The more aggressive 5-minute time frame bot has been going absolutely bonkers and closed a lot of beautiful trades, even in the last few days. If you haven't done so already, make sure to also watch my introduction to Minotaur video to learn more about this trading system. Now, before continuing with my thoughts on the markets, let's look at some other news and data. First things first, I'm happy to announce that Bitcoin futures trading will soon become a possibility for our American viewers again. I know that there are some workarounds with let's just say, questionable legality. But this is great news for people who just want to do what most of the world is already allowed to do anyway. After all, America is supposed to be the land of the free. This policy shift is no doubt a positive one, and it happened thanks to the more crypto-friendly administration that is currently in power. Say what you want about some of the other policies. Next, here's a fascinating website by Capriol Investments, shared by our Telegram member Droid1. The website tracks all kinds of interesting and unusual metrics used to measure Bitcoin's intrinsic value. For example, this chart shows Bitcoin's energy value in raw joules, with a simple moving average through the price oscillations. As you can see, we're currently undervalued and well below the average. In bull markets, it is common for the price to go well above it. Other charts here show a similar conclusion. Bitcoin has cooled off significantly, which will hopefully allow it to make a shock recovery soon. Now to the S&P. Not looking pretty, guys. We had a recovery bounce after a brutal crash, but it looks like it wants to head back down after stalling at a key resistance level. It's important for the low to hold while resetting indicators such as the stochastic RSI at the same time if we don't want another big leg down. However, DXY has not really recovered much either, which is good news for Bitcoin. We had a little bounce here off a key support area formed by past peaks, but nothing major, and it looks like it wants to go back down soon. While DXY and Bitcoin do not have a perfect inverse correlation due to occasional periods of overlapping price action, they have typically still created a clear overall inverse correlation during key bull and bear markets. The dollar eventually losing this key area of support could be just what Bitcoin needs. Back to Bitcoin. So, things are looking a bit doom and gloom in the short term, but I still believe people are overreacting. I'm thinking this is the final shakeout to get people to sell their Bitcoin before the true mania phase begins. My own personal potential target of 70k or so lines up perfectly with the projection by Marcus from the Minotaur Team. He believes we need to liquidate the last longs in this over-leveraged zone here, before having the energy to go back up to the upper area to liquidate the short liquidity up to at least 130k or so. We haven't broken this downtrending resistance line here either, so the short-term trend is still down, unless Bitcoin manages to convincingly break the pattern and hold support well above the current levels. One possibility could be a bullish inverse head and shoulders formation, but that's a bit of a stretch until we have actual confirmation. If we do end up going lower here, then that would be just one last amazing buying opportunity, at least for quite a while. A 30 to 40% correction is super common in Bitcoin's bull markets anyway. The night is darkest just before the dawn, so take a deep breath, stack sats, and hodl. Not financial advice, of course. If you'd like to support our work, consider subscribing to our LuxAlgo indicators by going to luxalgo.com/BTCPowerLaw. If you're interested in the Minotaur trading system instead, use the links in the pinned comment below to schedule a free consultation, or ask any questions from the team by going to our free Telegram group's Minotaur trading system topic. This is Saverio speaking, and as always, thanks for watching.